Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited and very grateful for life and for the opportunity to be with you today as we are going to be taking another fresh new look at the financial market. Before we kickstart the session, let's run through our daily routine just to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi or giving me a positive feedback that we are good to go. This is very, very important for me as it will enable me to know if we are all on the same page and if everything is okay on from our hand right here. And thank you very much as you do so. Okay, so let's just see what we have here. Oh, I have a bunch of comments here. All right. Okay, I can see you, Sinama Nado96. Thank you very much. Gosali, good morning to you. Hello, Remy, for sure. Good morning to you. Thank you for the compliment. BKP, good morning to you. Sure, we are going to be taking on gold today, so I encourage us all to stay tuned in so you don't miss out on these ideas. BKC says he cannot see my screen. Really? Can you please restart your app again and let's see how that plays out? All right, please let's restart your app, BKP, so let's know if things are quite okay. Okay, Carrie says everything is good here. Thank you, Carrie. Good morning to you. Glad to have you around. Oh, Nabila says it's fine. So BKP, I will encourage you to restart your app. It appears things are fine. Even from my hand here, it's looking great. Okay, so I guess on this note, we will be starting today's session. And once again, I welcome you all to another promising edition on the Extreme Speed Live Technical Analysis session. Before we dive into today's activity, I want to extend a sincere apology for the abrupt end to yesterday's session. It seems we experienced some technical difficulties due to internet reception issues, but I'm delighted that reports that everything is back up and running smoothly today. So thank you for your patience and understanding. My own name is Sharif Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective. Well, the last 24 hours has been quite impressive, and in fact, with the information we've had so far this week, I have a strong feeling that we were able to capitalize on the opportunities from yesterday following the FOMC announcement where the interest rate was left unchanged, just as expected. That was what everyone was expecting in the market, and the only surprise we had was the projection of a 3 times rate cut for this year. Everyone was expecting 2, but we had 3, and this has further weakened the US dollar, resulting in some enormous move yesterday. And we are going to be reviewing the market dynamics using the historical data to manage our current positions today, and of course prepare ourselves for today's trading session. And I do have very interesting and simple setups that we are going to be using to guide our decisions today. So I encourage us all to stay tuned in so that you wouldn't miss out on these interesting ideas we will be deliberating on today. And for those of you who are just joining us for the first time, if this is your first time here with us, you are very much welcome. And I know you will be wondering what this is all about and what is it that we actually do here. As technical traders, we gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. My aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach, and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, you're highly welcome and encourage you to actively engage in the comment section. So with that being said, we will be diving right into the business. And as usual, the first thing we will be doing this morning is to try and keep tabs with the economic events that will be influencing the market sentiments today. And based on the asset we've been monitoring since the beginning of the week, we will be focusing on economic features from both the United States and the United Kingdom economic docket. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the charts, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after this economic event. Now, so far this week, we've had some series of high impactful events to look out for, and from both the economies actually. So yesterday was one of the most interesting day, as we saw the consumer price index from the United Kingdom, which came in below expectation, giving us an inclination of a possible decline in inflation in the United Kingdom. As well, we saw how the market reacted to this event, especially after the FOMC announcement. We are going to be looking at the GBPUSD to see what really happened and how we intend to position ourselves for the next move. Then later on yesterday, we had the FOMC announcement, the Fed monetary policy statement, the interest rate decision, and of course the Fed chair, who also gave a speech yesterday. Hold on a second. All right, sorry for the break. So we had the Fed chairman's speech yesterday, and one of the things he did acknowledge that the inflation has been gradually declining, but the policymakers still need to see convincing figures from economic data to give the assurance that inflation rate is declining before making any rate cut. But it did project about 3 rate cuts, 75 basis point for this year, and these obviously has sent the US dollar crashing, and we are going to be looking at how we will be positioning ourselves for today. Now, today, Thursday, March 21, we have a handful of high impactful events. In fact, most of them is coming in from the United Kingdom. And this morning, we've had about 3 of them. Publication from the S&P Global for the manufacturing PMI, the composite and services PMI. And from all of this data here, you will see that the manufacturing PMI was the only one that came in beyond expectations and beat the previous month data at 49.9. Besides this, even though it's at 49.9, we do know that the S&P Global Index is rated between 0 to 100, and anything below 50 is considered as a contraction, and anything above 50 is considered as an expansion. So the 49.9 though is positive, but it's not still a good or LD data to portray for the manufacturing sector. Then we also had the composite PMI, which came in at 52.9, and the services PMI, which came in at 53.4, though it was below expectation, but it's still above the 50 mark. So we are going to be looking at how the market has reacted to this event so far and see how we're going to be moving on. Then in about an hour from now, we are going to be witnessing the interest rate decision from the United Kingdom, which obviously everyone is expecting the rates to be left unchanged at 5.25%. So we're looking forward to see what the actual result is going to be. Then we're also looking at the monetary policy report, which will be giving us a comprehensive insight into the economic outlook of the United Kingdom, and of course the monetary policy for the Bank of England. Then later on today, in about 3 hours from now, we are looking at the S&P Global Services PMI from the United States and the global manufacturing PMI also. And from the data we have here, we're expecting a contraction. So we're looking forward to see what the actual data is going to be on that one too. So these are the events we are going to be looking forward to today. So I encourage us all to mark the timing out so that we can have this as a reminder to strategically position ourselves at the right time. So with that being said, here we will be diving right into the business, and the first asset we are going to be looking at this morning is going to be the USOILSPOT. And following our analysis on the USOILSPOT yesterday, we had an interesting sell position from yesterday's trading session, as we saw price action triggers 3 of our sell orders at the $81.85 level right here. Hold on a second, let me highlight it so you can see. So we had the first trigger below the $81.85 level. We added one more at the $81.50 area, and of course added one more at the $81 area before that bullish momentum came in. And of course, you know how we do it in this community. When price moves significantly in our favor, we do want to be moving our stop losses accordingly to secure the position. And if you have done so, well done to you, as you will have been taken out of that sell position with a reasonable amount of profit on that asset. Now, before I also go further, I would like to readdress the conditions we saw at the beginning of the week that led into the situations we have on this asset this week. Remember, we bought the USOILSPOT on the first day of this week after capitalizing on the breakout of that $81 area. Now, look at what we saw here at the beginning of the week. We saw how price was confined within the $81 level and the $80.50 area to give us a range bound structure. And as at Monday, we were looking out for the breakout of that resistant line of that range to give us an opportunity to buy. So we saw the breakout happen here. Price broke out of that structure, welcomed our first buy position for the week. We also added more positions at the breakout of levels such as the $81.50 level and the $85.25 area. So as at Monday stroke Tuesday session, we were already running with over 200 pips in profit before the bearish momentum came in. So far this week, we've done pretty well on this particular asset. Now, as we get prepared for the New York session today, what is going to be our plans? And in fact, we do want to understand what is really going on behind the scenes. Now, after exiting yesterday's sell position with a modest profit, as you will see here, oil prices experienced some buying interest, especially during the Asian session. So look at what happened here. Following this move, we begin to see some bullish traction during the Asian session, partially reversing the losses from the previous day. And from yesterday's economic features, we saw that the Federal Reserve maintained its forecast for 3 interest rate cuts this year, which has weakened the US dollar and supported US dominated commodities like the crude oil. And the Fed chair acknowledged the strength in the US economy, which further boosts the outlook for oil demand. Additionally, a larger than expected decrease in US crude inventory combined with potential supply disruption from geopolitical tensions in Russia and the Middle East suggests that oil prices are likely going to continue to rise. The official report from the U.S. Energy Information Administration revealed a surprise decline of 2 million barrels in stockpile to 445 million barrels for the week ended for March 15. So at this point, investors are now awaiting the release of the PMIs for insight into global economic health, which could influence fuel demand. And this, coupled with the US dollar's price movement, presents some short-term trading opportunities in the oil market today. However, with the overall trend, I'm of the opinion that the bullish momentum is still very intact, especially with tomorrow being the last trading day of the week. So as always, we are going to be looking out for structures that we will be using to guide this momentum. So this morning, I personally sold a short-term opportunity here at the $81.50 level, and I have since moved my stop losses to secure this current sell position, as we may be seeing the beginning of this uptrend situation that the fundamentals is supporting. Now, to guide our decision for today, let's scale up into the higher time frame. So we want to refresh our memories as to what we saw at the beginning of the week. Now, remember when we were analyzing this asset on Monday, after taking into consideration the character of price action since the beginning of this year, it was an obvious fact that price action has been bullish. However, when we consider the character of price action in the last couple of weeks, we had this temporary ascending trend lines, which we did identify on Monday. So we had this one right here, and I had to project another one to capture the pivot lows here. And as you will see, following the strong bearish momentum that came in yesterday, we saw that as soon as price dropped into the trend line, we saw some buy pressure resume again. Now price is back into that $81 area, and since in the last 2-3 hours now, we have been noticing some buy pressure around this area. Now the question going into today's session is, will this buy pressure at the $81 persist in such a way that it will give us a double bottom structure around this area, giving us the privilege of joining the uptrend continuation? And for the fact that this whole structure is sharing a confluence with that ascending trend line, makes this area a sensitive zone to look out for trading opportunities. Now, with this information we have gathered here, we are going to be looking at two possibilities from this particular area, as the $81 level is going to be our center of focus today. Now, if it's possible that we see buy pressure continue, we want to be looking out for buying opportunities at the validation of that reversal pattern. However, if price drops below the $81 area, this will be the first time price will be breaking down this ascending trend line successfully in the last couple of weeks to hereby incite a bearish move, maybe back into that major ascending trend line that has been supporting that bullish momentum since the beginning of this year. And if this is going to be a successful breakdown, we're going to be looking at a maximum of over 400 pips to catch here, with multiple entries at levels such as our key level at the $80 area and the $79 level to maximize the potential of that bearish move. So I do want us to mark out these important levels on our chart, as we will be needing them to guide any bearish opportunity here. So with the information we have gathered on the 4 hours time frame, you would agree with me that we are at a crucial juncture in this market. We are depending on how price reacts to that area between the $81 level and the $81.85 level will determine what our next line of action will be. So to have a well-informed decision for today, let's scale back down into the 1 hour time frame. So like I was saying, we are back at the $81 area, which is right here, and in fact the last 3 hours we have seen buy pressure resume around that area. Now if it so happens that price action resumes buying pressure around this area, I already have a buy stop order above the $81.85 level to capitalize on that uptrend move, where the trigger of more levels such as the $82.25 area, the $82.80 level will be adding more positions to our existing trade here. So this is how we are going to be managing a bullish bias on this particular asset. So place your buy stop order above the $81.85 level. Now that this has been said, I want to see if we can actually join this bullish momentum before the breakout of the $81.85 level happens. Because if you look at the distance between where price action is right now and that $81.85 level, we are looking at over 80 pips to catch there. Now, to understand, to see if we can capitalize on the bullish momentum around this $81 area, we want to be looking out for any form of reversal pattern, maybe like a double bottom structure on our lower time frame, let's say the 15 minutes time frame. So it could be a double bottom structure, a inverse head and shoulder pattern, or a falling wedge. Then we mark out the neckline of that reversal pattern, then buy the breakout retest to join that bullish move. So we will have been able to capitalize on the bullish opportunity even before the breakout of the $81.85 level happens. Now I want to scale down into the 15 minutes time frame to see how the market has been reacting to this $81 area, if we can actually see a reversal pattern at this point in time. Now scaling down into the 15 minutes time frame, this is what we have here. So this is the $81 level here, and look at what has been going on here in the last 3 hours. We've been seeing some buy pressure, as you will see. We've been seeing some buy pressure here, and we have a couple of I think 3 hammer candles amongst this rejection, which technically reveals the presence of buyers. So we have one hammer candle here, right, and we have another one right here, and then another one, the small one right here. So we have about 3 hammer candles, which technically reveals the presence of buyers at this point in time. So to join a bullish move here, I will be looking at price breaking out and retesting the $81.15 level just right here. This may probably be the neckline of the structure. This could take about 2-3 hours before the formation happens. So we have the $81.15 level duly marked out here. So a breakout retest of the structure, please know what I just said here, a breakout and retest will be needed to confirm that this bullish momentum will continue. Then we can join then with our buy stop order above the $81.85 level and the other levels we identified earlier will be welcoming more buying opportunities for us. So this is my simple view on the US All Spot for today. So I would encourage us to mark out these levels accordingly on our chart, as we will be needing them to guide our independent trading decisions for today. If you have any questions whatsoever, or you need some clarification in any aspect of my illustration, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right, so in the absence of no questions, I want to assume that we are all on the same page. In that regard, we shall be moving on to the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the USTech 100, popularly known as the Nasdaq. And what a phenomenal week we have here on this particular asset. Remember, we have been buying this asset since the beginning of the week. We capitalized on the first trading opportunity, had the breakout of that 17,950 level, as you will see here, before the selling momentum came in, taking us out with about 100 pips thereabout on that day, though we had a stop loss at this point before we saw another opportunity to join the uptrend move from this moment. Now, during our live session yesterday, we did acknowledge this all over again. That is this descending trend line we identified here after capturing the series of lower highs since last week, Wednesday. And at this week, we saw how price broke out of that trend line, which of course incited that bullish idea we projected on this asset at the beginning of the week. And remember, I emphasized that we could be expecting a retest of the trend lines, which could incite the second leg of this bullish move, which was exactly what happened. Now, during our live session yesterday, before we went off, we talked about the potential of adding more buy positions to our existing trade, had the breakout of the $18,030 level, and then added more, had the breakout of the 18,110 area. So at this juncture, you should be having a minimum of 3 buy positions running in profit right now, where the first one is currently running with about 410 pips, while the second one is running with about 330 pips. That's about 700 plus in total, and the third one is running with about 240 pips. So roughly we are making over 1,000 pips if we had what we made at the beginning of the week. And for those of us who capitalize on this opportunity, well done and kudos to you. And if you still have your buy position running right now, it is high time you moved all your stop losses, securing this current buy position, as you do not want to be missing out on this profit you already locked in. So at this point, I will be suggesting that anywhere around the $18,030 level and the 18,000 $270 area seems most appropriate to move all stop losses to. And please ensure that you give enough breathing space for price action to move around. So with a well secured position at this juncture, what is going to be our next line of action for today? Well, before we go into the technical details, let's run through the higher time frame to see what is price action looking like on that time frame. So we started our analysis on the 4 hours time frame this week, and this is what we came up with. Now, what we did at the beginning of the week was to take into consideration the character of price action since the month of November of last year, and we were able to confirm that the market has been bullish, and we had a couple of ascending trend lines to support this bullish idea. And you know how we do it in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying. Now, in addition to this ascending trend line, and to make things a little bit easy for us to be able to manage whatever positions we are taking at the beginning of the week, we identified our key level at the 17,800 area. In fact, this level here has played a significant role in determining the direction of price action since the month of February of this year. And look at how this level had played a significant role. Though we had a choppy market condition throughout the midweek of February around here before price comfortably broke out of the structure during the last week of February. And since then, price action has maintained the bullish traction as every attempt by the sellers to break through the 17,800 was met with stiff resistance from the buyers. And the same thing happened at the beginning of the week as we saw price come back to retest the structure, and since that moment price action has been finding higher highs and higher lows. And remember that we are at an all-time high zone, which is usually characterized with choppy market conditions due to fear that the market may crash at any point in time. And this usually result into this condition, and of course you can see what has been going on here in the last couple of weeks. Market has been very choppy around that particular area. Now, as it is right now, price action has found a new high at the $18,425 level. So I want to be acknowledging that high as we are going to be using it to capitalize on an uptrend move if price goes ahead to break out of that structure. So you want to be labeling this area. So we have the 18,420. So let's mark out that level right there, and I would like it to show on the lower time frame too. So hold on a second, let me do this. Okay, so we have the 18,420 where price action as is the peak right now. That's the highest point price action has been. And I think we also have another level somewhere around the 18,350. Let me just use right here 18,350, which could be an area where a retest of structure could happen, considering so let me label this one 18,350. Okay, so this 18,350 level has been holding selling pressure for the last, hold on a second, I think 18,345 is what seems most appropriate here. 18,345. So I've just adjusted that. So we have the 18,345. Let me give this okay. So price has just broken out of the previous high, that is the 18,345. So what we are going to be looking at today is to see how the market is going to be reacting to this level. You know, from a theoretical standpoint, when price action breaks out of a key structure such as this, we may see price come back to retest the structure in an attempt to continue the uptrend move. And in fact, we may see a situation where it could transition into a consolidation phase, which could evolve into either an uptrend continuation pattern where the breakout of the 18,420 could welcome buying opportunity, and it can also evolve into a reversal pattern where the breakdown of the 18,345 could incite a sell-off, maybe back into any of those ascending trend lines we identified earlier. And I also want to emphasize here that this area has been a strong selling niche since the beginning of this month. So if price action breaks down and retests the structure, well, that breakout could be considered to be a false one, and then we shall be getting ready to join a bearish move to the downside. So at this point in time, we want to see how the market is going to be reacting to the 18,345 level. Now, when we scale down into the 1 hour time frame, we'll begin to see things more clearly. Hence, we want to be using the structure here to guide our trading decisions going forward. So with these levels identified here, so we see a situation now where price action is currently confined within the 18,420, yeah, and then the 18,345 level. So this is where our center of focus is going to be for today. So let me just zoom in and let's see how we will be preparing for the next move. So you know how we do it whenever price action falls into a range bound structure. We want to exercise patience and wait for price action to either break out of the resistant line of that range to give us an opportunity to add more buy positions to our existing trade, or the breakdown of the support line of that range to give us an opportunity to sell. Now, with the situation here, considering the strong bullish momentum we witnessed in the last 24 hours, I have a strong feeling that the momentum can continue to the upside. Now, if that is going to be the case, a buy stop order above the 18,420 will do just fine for us to join the bullish move. However, if price decides to drop, that is as a result of profit taking activity, especially as we gradually move to the second half of the new week a breakdown retest of the structure will be a good opportunity to join that decline to the downside, and we can be looking at a TP target between the 18,110 area and of course these ascending trend lines we identified on the higher time frame. So we are looking at a minimum of about 230 pips if price drops below the 18,345, and a maximum of about 540 pips to catch here on that regard. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions. And please remember that our center of focus for today is basically between the 18,420 and the 18,345 level, where depending on the direction of the breakout of the structure will give us an idea of where price is likely going. And please do not forget, for those of us who still have a buy position running, I told us earlier to move all the stop losses to secure this current buy position. So well done, and let's see how this is going to be playing out. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. So I see a couple of comments here from Manuel Trasound. Good morning. Holu, good morning to you. Hove1, good morning to you. And I can see Mukesh Nimavat. Good morning to you. Mukesh, good afternoon. You said good afternoon here, all right? So you said please guide about Gola and silver investing up or down. What do you mean by that? Okay, I guess you mean gold. I'm sure that's what you mean, right? We are going to be taking on gold in a couple of more pairs from now, so I encourage you to stay tuned in so that you don't miss out on the ideas we will be sharing on gold, okay? But silver, we do not have silver on our watch list for this week. So on Mondays, we usually have the opportunity of dropping in any asset you want us to look at and monitor for a particular week. So for this week, we do not have silver, but if you do want us to monitor silver next week, then join us on Monday morning, next week Monday, and give us this, and I trust me, I will try to incorporate it into our plans. Okay, so in the absence of no further questions, I'm of the opinion that we are all on the same page. So in that regard, we shall be moving on to the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at today is going to be the GBPUSD. And what an interesting situation we had here, especially after the FOMC announcement giving us this very strong bullish traction. And I do hope we all capitalized on this opportunity. Though we were not able to complete the GBP USD yesterday due to some technical issues that came up, but with the structures we had identified at the beginning of the week, it should be enough for us to manage this and navigate this current market dynamics yesterday. I just hope that you are able to capitalize on it. Now, let me quickly do a refresh of our memories as regards to what we talked about here at the beginning of the week. Now remember that we initially recorded a loss after buying this asset at the breakout of that resistance line here. So initially we had this range bound structure where price was confined within the 1.27390 level and the 1.27260 area, giving us a range bound structure. And you know how we treat range bound structures here in this community. We wait patiently for a signal to come in the form of either the breakout of the resistance line or the breakdown of this support line for trading opportunities. So with this understanding, we had our buy stop order triggered at the breakout of the resistance line, but unfortunately that position did not do very well as we were taking out of that buy position in a loss. However, the breakdown of this ascending trend line was strong enough for us to start considering selling. And remember, during our live session on Monday, due to the current structure, we had agreed that if price breaks down that ascending trend line at any point in time, a sell stop order below the 1.27260 will be good enough for us to join the bearish move. And this was exactly what happened, as we were able to recoup the loss we incurred at the beginning of the week, as we saw price action move over 60 pips in our favor before that bullish traction came in. And during our Tuesday session, we did emphasize that this old bullish traction here could be as a result of profit taking activities. Hence, we identified a sell window between the 1.273 and the 1.27150 area, which was about 61 to 68.1% and on 61% and 78.6% of the impulsive bearish leg we saw here. So after using our Fibonacci retracement tool, we were able to identify this area, and we did say that continued selling pressure here will be a good opportunity for us to sell. We sold again. We saw price moved about, how many pips was that? We saw price moved about 38-40 pips thereabout. And I do hope you moved your stop losses. If you did so, you must have been taken out with a reasonable amount of profit on that one, or at a worst case scenario, break even. Now, during the live session, during our session here on that day, I did mention to us all that if at any point in time price action breaks down, breaks out of this descending trend lines we identified at the beginning of the week. Remember, we had this identified, and I do hope you marked it out on your chart. If you had done so, it was enough for us to guide our trading decisions yesterday. And we did say that if at any point in time price breaks out of that descending trend line, we are going to be good to buy. And due to this, we saw the buy position triggered here at the 1.27165. Price in fact came back to retest the structure a couple of times before the uptrend continuation happens. And with buy stop orders at multiple levels, remember since Monday we had buy stop orders at the 1.27390 and the 1.27600 area, which all got triggered during our trading session yesterday, giving us over the first buy position moved over 85 pips, the second buy position moved over 65 pips, and then with the third buy position moved over 40 pips, giving us close to about 200 pips in profit before this bearish momentum came in. And as usual, whenever price action moves significantly in our favor, you know how we do it. We ensure to move all our stop losses and secure the position. And if you had done so, you must have been taken out of all the buy positions at this point in time. And once again, well done and kudos to everyone who had capitalized on this opportunity. Now, as we head into the New York session today, what is going to be our plans for today as we begin to notice some selling pressure resume, giving us signs that the dollar may be doing some recovery from the descent it had yesterday. Generally speaking, the US dollar's overall weakness stemming from the recent Federal Reserve policy decision is lending support to the GBPUSD ahead of the crucial Bank of England policy announcement coming up later today. And it is widely anticipated that the Bank of England will be keeping its benchmark interest rate steady at 5.25%. Persistent disinflationary pressure evident in the UK's February data are fueling speculations of earlier interest rate cuts. Now, the consumer price index rose by 3.4% year on year in February, and core CPI increased by 4.5%, challenging the Bank of England's previous stance of maintaining higher rates for an extended period of time. Now, considering these factors, how do we intend to position ourselves for the next move? Will market sentiment bank on these inflationary figures to drop the pound sterling after making some significant profit following the FOMC announcement yesterday? Or are we going to see price continue the momentum to the upside? Now, for us to have a clearer perspective into what is going on here, we would like to scale back into the higher time frame so we can have an holistic perspective into what is going on in this market. Now, remember, our analysis for this week started on the 4 hours time frame. I think, remember, we had a 4 hours time frame analysis at the beginning of the week after considering the character of price action since the beginning of the month of February. And it was quite obvious that since the month of February, the market has been very bullish, and in that regard, we had a couple of ascending trend lines after connecting the series of higher lows, giving us and emphasizing the strength of the buyers in this market. Now, with an ascending trend line marked out, this is what we had here at the beginning of the week. Then we saw our price broke down that ascending trend line for the first time in about 6 to 7 weeks to incite a bearish signal for us. Now, zooming into the character of price action since the new week began, we saw the breakdown of the structure, which actually triggered our first sell position for the week. We added another one here which failed to continue to the downside, though we were able to make some small profit on that one before this engulfing candle evolved from this whole area following the FOMC announcement yesterday, giving us what's looking like a reversal pattern in the form of a double bottom structure. Now, for those who are wondering where the reversal pattern is, let me give you a visual representation to see what I'm talking about here. So we saw this impulsive move to the downside, and as soon as price dropped into that area around the 1.26750 area, we saw price come back into this area. Then another attempt by sellers to continue the momentum failed, as we saw a new higher low. And with this kind of situation, we have our neckline of this reversal pattern at the 1.27250 area. And with the breakout of this neckline with an engulfing bullish candle, it further validated that reversal pattern with the hopes that price may continue the uptrend. Now, with the situation we have here, and from a theoretical standpoint, whenever price breaks out of our neckline, we expect that some point in time price may come back to retest the structure in an attempt to continue the uptrend move. Now, with this situation here, it appears that price action is gradually approaching the neckline. Now, we have two structures to monitor to guide our trading decisions today. The first one, which is the key level for this week, which is the 1.276, remember, and then we've seen we saw how this level here is sharing a beautiful confluence with that ascending trend line we identified earlier, as you will see. Let me thicken it a little bit so that we can see how important it is. All right, so we had this ascending trend line marked out at the beginning of the week, and you can see how it shares a confluence with that key level. So we are going to be monitoring how price will be reacting to this confluence today. Now, depending on what happens here will determine what our next line of action will be. So if buy pressure resumes here, like double bottom structure, continue buy pressure on our lower time frame, that is, we see signs that sellers are finding it difficult to break down that ascending trend line, then we will be good to continue the uptrend, while the further breakout of the 1.28035 will welcome more buy positions. However, if price action breaks down the 1.276 and the ascending trend line, then we are going to be looking at the neckline area for the next uptrend continuation. Now look at how beautifully that neckline shares a confluence with this descending trend line here. So let me extend this descending trend line out a little bit so we can see how it is. So I will just thicken this one a little bit. All right, so look at this descending trend line right here and how it shares a confluence with that neckline at the 1.27250 area. So we have two juncture we are looking at today to continue the uptrend. One is around the 1.276 and the other one is around the 1.27250 area, where we shall be looking out for uptrend continuation patterns to join the move to the upside. So I'm still looking at a bullish bias on the GBPUSD for today, looking at these two structures as an area to look out for buying opportunity and join the uptrend continuation. However, in as much as we're looking out for buying opportunity here, and especially in anticipation of the Bank of England's policy announcement coming up later today, which everyone is expecting interest rate to be left unchanged at 5.25%, but we never can tell. There will be surprises, we never can tell. But if surprises happens here, what are the conditions that will make us want to sell? Well, if I'm going to be selling the GBPUSD, I would rather want to see price action drop below this descending trend line, which for me will be considered as a seller's territory. So if price can drop below this descending trend line, then I will start considering selling. But we are not going to be jumping into selling right away. As soon as price break down that structure, we will need some confirmations to happen, which obviously will reflect on the chart as retest of structure, continuous selling pressure, giving us signs that buyers are finding it difficult to climb back above that descending trend line before joining that decline to the downside. And if price continues to drop, the breakdown of the 1.26750 will welcome more selling opportunities. So this is how we are going to be managing the GBPUSD for today. So I do encourage us all to mark out these levels accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions. So we are looking at the 1.276 area and the 1.27250 for buying patterns, and then breakdown of this descending trend line for selling opportunities. I hope I made myself clear there. But if you have any questions whatsoever, feel free to let me know in the comment section. So this is what we are going to be looking at for today. This is the simple structure we have here. We are buying the breakout of the 1.28035 a breakout. We're looking out for a reversal pattern at the 1.276, looking out for a reversal pattern at the 1.27250 if the 1.276 is broken to the downside. So this is my simple view on the GBPUSD for today. We maintain a bullish bias, and let's see how the market is going to play out. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds due to the limited time I have before we move on to the final asset on our watch list for today. Stay tuned in, guys, and you can use that time to mark out those levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Okay, so I can see a couple of comments here. I see you, Sinamar. Dino, good morning to you. Miraculous04 says he's new here. Thank you. Glad to have you around with us. I hope you are finding this session enlightening and insightful. Then I can see Jognas too. Jognas, good morning to you too. Glad to have you around this morning. Who else is here again? Kisas Vak Yok. I hope I pronounced that correctly. Mukesh Nimavat again with XAUUSD. Sure, we are going to be doing XAUUSD in a moment. Stay tuned in, Mukesh. All right. So, in the absence of no further questions, we are going to be diving right into the final asset for today. Stay tuned in. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what a phenomenal week we've had here on these assets. Though the beginning of the week was very choppy. We had some situations where we had sell positions, which obviously went into break even at some point before we finally saw that traction yesterday, signaling an uptrend move. The Federal Reserve surprised the market by maintaining its projection of 3 rate cuts for this year instead of the expected 2, causing the US dollar to weaken significantly. Currently, we have at least 3 active buy positions after capitalizing on this uptrend move. Remember, we've had our buy stop orders at these levels above our key level. Remember, we said that we are not going to be buying this asset unless price action breaks out of this descending trend line we spotted at the beginning of the week. Now, for the sake of clarity and for the sake of those who missed out on our earlier session, let's quickly visit the higher time frame where we identified the structure and why we said we will be buying only at the breakout of that trend line. So scaling up into the 4 hours time frame, right at the beginning of the week, we did acknowledge the uptrend, the strength of the buyers in this market, and in fact we saw this impulsive move all the way from the second week of the month of February as price action hit an all-time high at the 2,195 as at 2 weeks ago. Now, during our live session on Monday, we did acknowledge that especially when price action finds a new high, due to the fear of price crashing, we see major key players in the market closing in on their position, which would reflect on the chart as a retracement move, consolidation phases, or choppy market condition. And obviously, we saw the market was choppy for about 2 weeks as we saw price transition into a structure here, which we assigned an uptrend continuation pattern here following that impulsive move. And as at the beginning of this week, we were looking at the possibilities of this structure evolving into either an uptrend continuation pattern or a reversal pattern. And we were saying here that we will be selling if we see price break down our key level at the $2,155 area, which of course we saw a couple of breakdowns during the week. We sold, actually, we had a couple of break even before the move to the upside happened. And we said here that the only condition that will make us to buy is for the resistant line of this pattern to be broken to the upside, and with a buy stop order sitting above the $2,162 area, we were able to capitalize on this bullish move. Remember, we've placed this buy stop order since Tuesday's trading session, and look at what happened here. Price just continued to climb to the upside. And remember that we had multiple levels to maximize that potential move, which we all identified on the 1 hour time frame. So we had multiple levels. Remember, we had a 2,167 level here, which we also said we will be using to add more positions to our trade. So as of this morning, we have a minimum of 1,000 pips from a minimum of 2 buy positions on this asset. And for those of us who capitalized on this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, as it is right now, it is high time. If you still have your buy position running and active, it is high time you moved your stop losses accordingly, as we may be seeing some bearish traction happen today as market participants may be preparing to round off trading activity for this week, or may want to be doing some profit taking activities today. So if you would ask me, I will be looking at the previous support zone here around the 2,200 level and the 2,196 197 area to move our stop losses to secure this position while we look out for new trading opportunities. So once again, congratulations to everyone who capitalized on this opportunity. And as it is right now, during yesterday, during the FOMC announcement, we had some couple of highlights which I would like to go slightly into so that we can have a background knowledge of what is going on behind the scenes that has been driving the market sentiment so far. The Fed did revise upward its projection for the federal funds rate, the FFR, in 2025, adding downward pressure to the US dollar. And what does this simply mean by revising upward the FFR? Well, in simple terms, how will I put this? Okay. So in simple terms, this narrative is saying that after 2 months of unexpectedly high inflation reports, the Federal Reserve adjusted its expectation for interest rate in 2025. However, for 2024, the expected interest rate remains the same as it was in December, with a median of 4.6%. And despite this, the Federal Reserve increased its forecast for the FFR for 3.6% to 3.9% for the year 2025. The implication of this information for the price of gold is this. One, we have a couple of them: higher interest rates. When interest rate increases, it becomes more expensive to borrow money. This can potentially slow down the economic growth and reduce inflationary pressure. And as a result of this, investors may be less inclined to hold on to non-interest yielding assets like gold, leading to a decrease in demand and consequently a decrease in the price of gold. So this is very, very key to this current structure, especially as price action is finding a new high around the 2,210 level. Now, another thing is the expectations for future inflation. While the Federal Reserve has adjusted its expectation for interest rate in 2025, it's important to note that they have maintained a relatively high expectation for inflation in 2024. If inflation remains high or even increases further, investors may turn to gold as a hedge against inflation, potentially increasing demand and driving up the price of gold. However, if the Federal Reserve action are perceived as effectively controlling inflation, it could dampen the appeal of gold as an inflation hedge, leading to a decrease in its price. So overall, the impact of this adjustment on the price of gold will depend on how they influence the sentiment in the market regarding inflation, interest rates, and the overall economic outlook. So with this situation we have here, we're beginning to see a structure evolve on the chart. However, in addition to the prevailing risk on sentiments, evidenced by the recent bullish trend in the global equity market, is tempering the upward momentum for gold, especially as the market shows signs of being slightly overbought on the higher time frame. So despite these factors anyways, outlook still suggests that the path of least resistance for gold is still looking to the upside, but I still think market participants will want to wait for the release of the PMIs, that is the S&P Global, for insights into the global economic health, which could provide further support for safe haven assets such as gold. So with this in mind, how do we intend to capitalize on the next move? Well, looking at the structure, bringing out my line chart here, I'm beginning to see the line chart is not really projecting the wicks here. So let me just use the price, the candlestick chart. So we have something like this. You can see we have a trend line around this area. So let's mark this trend line here. So we are looking at an uptrend continuation pattern, which is looking like an ascending triangle where the breakout of the $2,210 level breakout retest will be all we need to continue the uptrend move. So if we are going to be buying today, we want to see price break out of the resistance line of that ascending triangle for us to join an uptrend move. However, if the opposite happens and continued selling pressure persists here, we may be looking at a breakdown of this ascending trend line to incite a sell-off, which could be considered to be as a result of profit-taking activity following the strong bullish momentum that happened yesterday. So we may see a situation where market participants who had capitalized on the uptrend move may want to start taking in some profit, which could drop price to the downside, and we will be looking at a minimum of about 350 pips to catch if price drops into the structure, or a maximum of about 500 pips plus if price drops into our key zone around the 2155 level. So to guide our selling opportunities here, we need a structure. So we have a level right here at the $2,001.50 area. So I encourage us all to mark out these levels on our chart, as we are going to be using it to guide our trading decisions going forward. So we have the $2,201.50 level to join a bearish momentum. So I'm looking for my, okay, just right here. So let me just place it right here. So this is where our center of focus is going to be for today. So I encourage us all to mark out this level. So we have a range bound structure right now where our center of focus is going to be between the $2,210 level and the $2,201.50 area, where we shall exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. So I encourage us to mark out this level, and let's see how the market is going to be reacting to the zone. So this is my simple view for today's trading session. So let's see how this is going to play out for the next 24 hours, and we shall be back here tomorrow to review how well these assets have been doing. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions whatsoever before we start rounding off our trading, our technical analysis session for today. See you soon, guys. All right. So I can see you, Zenahar. Good morning. Oh, Zenahar says he's new here. Hooray, glad to have you around with us this morning, and I do hope you found the session insightful. I'm looking forward to seeing more of you during our subsequent sessions. Okay, you're welcome, Zenahar. Tausi, hello, how are you doing? Jonomix, trust you're doing very well. Glad to have you around. Hello, Wada. Good morning to you too. All right. So, in the absence of no further questions, I guess we are at the coming to the end of today's technical analysis session. Right here on the Extra and Speed, and in fact it has been a wonderful day with you guys. I really enjoyed every single moment, and in fact this week has been phenomenal for us all as we are riding on the positive side of our portfolios. And once again, congratulations to everyone who had capitalized and been part of this profitable journey. So today we were able to attend to the 4 financial instruments on our watch list for this week, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq, the GBPUSD, and of course my favorite amongst them all, the XAUUSD, popularly known as the Gold Spot. And on all of these assets we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns to position ourselves for the next move. And I do hope you all marked out these levels accordingly on your chart. If you have done so, well done and kudos to you. So all we need to do now is exercise patience and allow the structures to mature. Always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy to protect your portfolio. For those of you who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually use them to improve your trading decisions and strategies. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and of course prepare for the last trading day of the week, which promises to be another exciting one as we will be positioning ourselves strategically to capitalize on how market participants will be rounding off their trading activities for the week and ahead of the weekend. And of course, this kind of situation usually brings some volatility in the market, and we do want to be on standby to capitalize on these opportunities. So I look forward to seeing you tomorrow. Set your calendar, the times on your calendar, and let's be here again to round up the week on a positive note. So it's on this note I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.